Hey, Doug, a Community Lending Group. And for this week's Mortgage Moment, I've got some crucial news that's going to be relevant to over 45 million individuals. Because beginning October 1st, 2023, all student loan debt payments will resume, affecting a staggering 45.3 million borrowers nationwide. Now, these payments, along with accompanying interest charges, have been on pause since the onset of the COVID pandemic. Now, with the collective student loan debt in the United States exceeding a whopping $1.75 trillion, the average federal student loan debt stands at over $37,000. Now, with the payments restarting, the typical borrower can anticipate monthly payments exceeding $287 each month, and significantly more if they plan on paying off their debt in less than 20 years. Now, this development arrives at a time when credit card debt has hit an all-time record high, while the savings have dipped to all-time near lows. Now, it's a challenging scenario for many, so let me introduce a potential solution. Now, conventional loans offer a student loan waiver that allows you to settle your student loan debt with the equity in your home without classifying it as a cash-out refinance, as this would cause your interest rate to go higher. Let me explain how this works. Now, when you take cash out when you're doing a refinance on your home, it's considered a cash out refinance. This exposes the lender to more risk, which they pass on to you, the consumer, with higher interest rates. Now, depending on your credit score, this cash out adjustment can adjust your rate by as much as half a point or even more. However, the Student Loan Waiver Program removes these additional charges and treats the loan as a regular rate from refinance, thus keeping your interest rate lower. Now, there's just a couple conditions that need to be met. The student loan debt must be linked to someone on the loan. You can't pay off someone else's debt. Next, the proceeds from the refinance must be paid directly to the student loan servicer at the time of closing. And finally, the student loan must be paid off entirely. You can't pay off just a portion of it if there's not enough equity in your home. Now, if you happen to have multiple accounts, you can pay off individual accounts, but when you're paying these accounts off, they must be paid off in full. So if you think you might struggle with these impending student loan payments, which will be coming due here just in another week, let's explore the possibility of increasing your cash flow by tapping into your home's equity. If you've owned your home for more than a couple of years, there's a good chance that you have sufficient equity at your disposal. So give me a call or reach out to your loan officer so you can see the options that are available to you. You can always leave me a comment below or shoot me an email or send me a personal message. I'd love to hear from you. And if you found this information helpful, make sure to like the page and subscribe to my channel. It really does help as I'm trying to grow this channel. And make sure and share it with anybody else that you might find it beneficial to them. This is Doug with Community Lending. Thanks for watching, and I look forward to hearing from you soon.